All right, good morning, everyone. Welcome to the morning brief. Today is Tuesday, August 25th. We're going to invest with military precision. We're having some technical issues this morning, so I'm fighting through those while we get everything up and running. It appears the Schwab platform is not going to be with us today. So I'm going to be clicking on a few things here to try to get that to wake up while we're talking. All right, for our mission objectives today, we're going to grow our money, protect our money, and live off our money. What that really means is we're going to today talk about the shakeup in the Dow. You heard yesterday, 3 Dow stocks are leaving the index, and then 3 new ones are going in. That was a surprise, at least to those on the outside, that was actually going to happen. So we'll see how those stocks are moving, and we'll take a look at the long-term implications of that. And again, that was largely caused by Apple, which you see down here below, which we talked about yesterday. But there's Schwab waking up. So, all right, maybe actually be full up here today. So that's what we're going to talk about is the shakeup in the Dow. And then the question of the day that we didn't get to yesterday because I ran short on time was when to sell a stock. So I will get to that today, I promise you. All right, as far as our flow today, it's going to be long, short, open, short, long. What that means is we're going to do around the world review. Lots of green out there today. And then we're going to take a look at the headline review. Get these guys muted. And then we'll go on into our long-term investments, which again are going to be the 6 stocks, the 3 that are in and the 3 that are back out of the Dow. All right. We'll get into short day trading opportunities as we get in closer. Again, bright green day, but we did have 2 nice shorts that worked yesterday. Both went on to a multiple R kind of day, so both sold off pretty hard, but we at least got our 3 Rs out of both of those. So we'll go through that in the execution, and then we will get back to the question of the day, which is what we'll close with. As always, put your comments in the chat as well as questions in the Q&A window, and I will get to those. I do promise that. And the standard disclaimer always applies. This is an educational briefing, so please do your own diligence, do your own due diligence before you act on anything you see today. All right, let's go up to TD Ameritrade, and we will take a look at where we have been in the past year. So here we go. This is again the SPY. Nice big up day yesterday for the S&P 500, taking us basically to new highs up here at 344 or so. As far as when you look at where we've been in the Qs, again, Qs are way higher. So well up here, even though it ended up in the red, and the NASDAQ starting in the red today. But overall, I mean, pretty much straight up from the lows there. So nice growth we've had. I do not expect that to continue. I've been wrong so far, but we are 2 months up. 2 months and 1 week out from the election. So I think after the convention wraps up this week for the Republicans, we should start seeing the market kind of start to price in some of the volatility that should be coming our way. All right, as far as taking a look at the 5-day chart, again on the SPY, nice move up yesterday, kind of sold off throughout the day, and then it was that last 45 minutes that really moved higher for everyone. And then, of course, we gapped up pretty significantly, kind of holding up here. So we'll see how that plays out. 4 different earnings that we have out there this morning. Smucker was out this morning, beating earnings. The Palo Alto Networks, it was out last night, beating earnings as well. So far, pretty much everyone's beating earnings. Some of the stocks are selling off like Palo Alto did based on some guidance, but overall, it's been very positive as we wrap up earnings season. All right, let's get back to the headlines here on the main screen. Get that shared out to you. There we go. All right, that should be coming your way, and you can see how we look at this morning. I'll hit a quick refresh. So we got the Dow and the S&P up in the green, have NASDAQ down in the red a bit. As far as Europe, was up across the board last time I checked, and it still is. Asia was mixed. You have Japan that was up. China and Hong Kong are down, as well as Australia and Korea are in the green. All right, as far as the move yesterday, again, this was largely the last 45 minutes where everything moved up. And volatility, man, the long volatility trade has been nothing, right? It keeps selling off. So when and if this market ever does take a breather, the long volatility trade is going to be a winner. All right, goes over into bonds, a little bit of an uptick above 0.7. We haven't seen that in months, really. So again, things are recovering in the bond market. All right, over into oil, you know about the hurricanes in the Gulf. So oil's up to around 43 or so. Expect that to continue up. It appears Marco is dying off, if I have my names right, and then Laura is the one that's actually picking up pace in the Gulf there. Stay tuned to the mainstream media for that storyline, though. And as well as the precious metals are pretty well mixed across the board. All right, for headlines out there, really Republican National Convention was kind of the big headline from last night as far as the main speakers and kicking everything off. So all that appears to go well, just like the DNC did it last week. Market goes higher on half the people expecting amazing things out of a change in power, while this half expects the amazing things out of keeping the same establishment in place, if you will. Okay, new cases of coronavirus down across most of the U.S. Again, that will go largely back to some testing issues when you tie those two stats together. All right, let's see. These are the three stocks that were added: Salesforce, Amgen, and Honeywell. So we will take a look at all three of those. They replaced Raytheon, Pfizer, and ExxonMobil, two of which those I'm invested in. So that's not a good sign for Raytheon and ExxonMobil. So I left some ExxonMobil prior to this, probably going to have to move out of it completely. And then Raytheon has been a problem, which for really, I don't know why. It's been kind of left for dead in the defense space. So I will stay invested in Raytheon, expecting that it will come back at some point. May not be soon, though, because it just left the Dow. Best Buy, yeah, crushed earnings out there, and it sold off, right? Because of they're thinking that everybody revamping into the work from home environment may not last forever. So good on them for beating earnings, but not helping the stock out. Jeremy Siegel, if you follow him, obviously a sage voice in the investing space, basically said that the market's going to rock on. Companies have pivoted. They're finding new ways to make money, and that will override anything the coronavirus throws at us. So that's kind of good news for everybody. Okay, Laura, officially a hurricane. We just talked about that. Here's another one that affects many of us here. If you own Baba, Alibaba from the Chinese Amazon, obviously Ant Financial is a portion of that. So it says they filed for an IPO. It's really kind of a spinoff from Alibaba. So it'll be interesting to see if we get actual shares of Ant Financial, or Ant Group, they're calling it here, but it's really their financial arm as they spin off. So I'm hoping that we do pick up some shares there. All right, these were all upgrades across the board: Apple, Facebook, Chipotle, Starbucks, and many more. A lot of that is analysts just catching up with where the stocks have gone. Like Apple was upgraded to 520. Apple was over 500 yesterday. It's holding over 500 this morning. I don't think that's realistic that will hold there. I hope it does, but I just don't. I expect it to come back in. We shall see. Hormel crushed earnings, Medtronic beat earnings as well, and then we know about Exxon selling off a little bit there. All right, those are numbers from yesterday. Okay, let's go over to the big board. We'll skip. Well, I was going to show you this real quick. On FinViz, here's Salesforce, which is the tech component they got added to the Dow of the 6 names. So really, I've always liked Salesforce. They've got a great CEO and Mark Benioff. Basically print money, don't pay a dividend, lots of strong returns, basically a double from where it was at the low all the way up to where it is now. So obviously very strong company with big contracts out there. All right, over to Schwab, which hopefully it works. It's been a problem child this morning. It dumped all the names I had in here, so let me add them real quick. So we got CRM and Honeywell. These first 3 are the ones that are going into the Dow. Amgen, that's not right. Oh, there it did pop up correct. AMGN, AMGN. All right, and the three that are going out are RTX and Pfizer and ExxonMobil. So again, why make this shakeup? It's largely because of Apple's split. So Apple is a market cap weighted component of the Dow. So therefore, they're going to need to make some adjustments. Otherwise, the Dow is going to kind of get hammered on the split Monday, just based off of the market cap adjustment there. So you see Salesforce. See if we can get that clicked over to Salesforce's actual chart. There we go. And zoom out here a little bit. Excuse me. So Salesforce has run up nice. Again, that's the tech component. We've got the, I don't know why it says Tesla. Let's get rid of that. Serum, Honeywell is the other one. There we go. You can see Honeywell's chart. Again, defense stocks have been a little bit not as recovered as much as the tech stocks out there, but still in the process of recovering. And defense stocks tend to win an election either way, regardless, because if the Republicans will want to bolster defense and the Democrats will want to look tough. So I expect defense stocks to catch up, and Honeywell has been doing better than Raytheon out there. As far as Amgen, again, just replacing Pfizer as the medical component there. So you can see the Raytheon has been problematic. It's basically, it started to recover with everything else, and then it's kind of been selling off. And I don't really have a reason for that. Everything appears strong. And then Pfizer, we have down at the bottom, has had a nice recovery along with everything medical out there. And then ExxonMobil has just been a house of pain, sliding right into COVID. And even though it tried to get up, here, I was a buyer in at the 42 level when it hit it the first time. So kind of caught this wave up and picked up a couple dividends. But yeah, I think we have to get back out of the Pfizer name there. So again, the shakeup in the Dow will all take effect on August 31st, which again is Monday, next Monday, if you will. Okay, as far as the different names that are out there, let's take a look on the short side of how it's affecting the three that are dropping out of the Dow. So Raytheon selling off a little bit. So RTX 61.88 down to 61. I do expect that to continue to sell off through the day. We shall see. And write down some other names up here while we're at it. Looking off the gapping down chart down below, and Palo Alto. So let's see how Exxon's handling it this morning. 42 again, selling off for about $1, only a couple percent as it sells off there. So down to 41.38. So it's sitting down here right now. So it's got room to move to the downside as this continues to slide. So keep an eye on ExxonMobil. Then the last one is Pfizer. Pfizer's only been affected by like 50 cents. It's down in this range, 38.35. So crossing here, yeah, we'll keep an eye on it. Again, I don't think any of those, they don't meet our numbers as far as being off 5 to 10% and having the volume. Of course, it has the volume, but not the drop of 5 to 10%. Okay, another couple names that came across there is POR. Let's see what they do. That didn't take. One more time, POR. Portland General Electric gapping down almost 10%, so from 42 to 37. Wow, that is a gap down. Let's see what we can find here out of the headlines. That appears to be fraud allegations, investigation of POR on behalf of investors. So I like this. So a fraud allegation, again, gapping down all the way down to 36. We'll see see where it opens. Pretty low volume though, so we'll have to wait for the volume there. So minus 10%, legal, wait for volume. But I do like the way that's set up. All right, PLCE, I want to say that's Children's Place. We will confirm. Children's Place, okay, it has the volume. 23 down to 2040, it is gapping down. Let's see, the actual percent is off 6%, so this meets our criteria exactly. Okay, they missed earnings, wider than expected loss, so losing money and lost more than they thought. They did beat on revenue, just not on profit. Just kind of reading that paragraph real quick to see if anything jumps out. Open the majority, June. Permanently closed 102 stores, another 100 planned to close next year. So yeah, a lot of negative news there. So I like the way this one is setting up. Let's check out. It's been up at 23, gapped all the way down here to it's at 2030. So down in this range. Zoom out, see where it's been. It's been hanging out 24 to 28 range. So yeah, I like the way that's set up there. Keep an eye on that. That's probably our number one choice short. And then BBY, Best Buy, we talked about they beat earnings and what 242%, right? And then it appears they're guiding down though. So 117 to 113. See what the actual percent is, down 3%. So don't love that since they beat earnings, but it certainly looks like they're going to sell off. They've been up here. Go out a little bit. Oh, wow. Yeah, they can sell off hard. Look at this. So they rose. This was what, mid-July from 85 all the way up to here. So they've been ramping up hard. Yeah, this has room to fall. So down to 113. So that will be our number two there with Best Buy. I do like that. All right, would like to see it sell off a little more before going into the opening, but we shall see. All right, and then Palo Alto is the next one to take a look at. Again, this would be a short. They beat earnings, but missed on, let's see, they guided down. Shares are selling off. So 267 down to 258, kind of a high price point. But again, this one has this one's been straight up. It's got a lot of room to fall, especially if the market turns red. So we'll keep an eye on that. That's kind of my third favorite. All right, over into the tabs, 9 minutes to the open. Let's see what the most volume is. Urban One. What's Urban One? I don't know, but it is gapping up. That is for sure on no news. So we'll just keep an eye on that as far as a long. Not going to take it, just curious to see what happens there. Rocket again was in play yesterday. Again, IPO'd what, August 7th. So it's been out there for a couple weeks. It has been marching higher, gapping up from 29 all the way to 30. So that would be a long. I'm not going to take a long there, but if you were looking long, certainly it's a momentum play. Sorrento we took yesterday and it worked. Again, this would be a continuation SRNE to the downside. See, it's gapping from 812 to 781. The action yesterday, again, gap down here. This is where we hit our 3 R's. It popped back up. If you remember, if you didn't get out of it there because it happened so fast, it happened again. And then again, it doubled and went down to like the 7 R point at the low, and then kind of bounced back up. So really, it's just a continuation of where it was off yesterday. So we'll keep an eye on that. Would not take that as a primary, but may switch to it secondary. All right. Again, looking at volume first here, SJM, a little light on the volume, but moving up. Let's see how far that Smucker has fallen. It never did fall. These are new highs for it, or new recent highs anyway. So SJM long off earnings. It does meet our criteria. So again, if you want to take that long, I don't know. how much it can I mean, that would have to fly up. Just don't know about that. There's Honeywell, obviously getting a bump from going in the Dow. That's probably a safer bet, just to take Honeywell long. Happened from 159, so right here, all the way up to 165. All right, Amgen, same story. It'll have the volume. I like this a little bit better because it's just fallen from these highs. So let's keep an eye on Amgen. So this would be my number one as far as longs, even though I'm going to put up 3 shorts across the board. There's your Salesforce, same story. It's got the volume. I think that's off to new highs up here at 2013 is where it's saying it's at right now. So down here. All right, take a look at the shorts. There's that Portland company. Again, this is a legal thing, so I really liked that. Might have to take it out of the gate though, so we'll look at that first. And again, it's low volume, so there's a bunch of risk there. Invax, again, we looked at this short yesterday. It is meeting the criteria to go short again. Let's take a look. No headlines, just a continuation of this thing dropping like a rock from a high of 2 weeks ago of 196 down to it's at 112. That will probably continue to sell off. So again, that's a continuation. Does meet our criteria. So a bunch of shorts meet our criteria today. Tiffany in the news for don't see the headline. This is bringing this down though. So gapping down from 127 to 122. I'll just put it in the notes to look at. Not something I'm going to take. All right, none of these others meet the criteria. Let's check this out. We got 4 minutes to the open. So again, if you're starting to set up your stuff, I like POR, which is again is that legal one. PLCE, which is Children's Place, and BBY. All 3 of those short are going to be number 1, 2, and 3 that will set the charts up here for a second. All right, rocket long if you want it. Gap is gapping up, GPS. Bunch of retailers kind of gapping up here as well. There's the Urban One. We'll keep an eye on that. Lee Automotive, that one's been on fire. That gapped up yesterday as well. This would be a continuation on Lee. Okay, let's switch over to our trading screen and get set up. Good morning, Silver. Welcome to the room. Just noticed that you are here. All right, looking at 3 shorts today. Again, on the left, you have the SPY. We'll set this up as POR. Again, low volume on POR, may not even hardly moved pre-market, but again, legal investigation there, so I really liked that. And then second is PLCE. Again, negative earnings story and closure and store closures. And then BBBY, which is Best Buy. That's kind of leveled off. So I don't really like that action. Let's look at Palo Alto. I don't like that action either. Look at Invax. Okay, let's keep an eye on Invax. Again, this will be a continuation. So again, all 3 of these are short. Let's talk about, we'll see what we get out of this. If you get in this, you're going to need a large stop. So let's use a 50-cent stop in POR. So plan out your share sizing. Again, you can go to ototnow.com if you need your spreadsheet to help you figure this stuff out. PLCE, it's got the volume. We could take that right away. It's continuing to sell off. Back out a little bit. Okay, so pretty much stabbing at that on the way down. Let's see, probably I'd say 40 cents on PLCE, and then NVAX you'd need at least $1. Let's think $1.50 as far as the stops on NVAX if you want to give yourself plenty of room. All right, 30 seconds to the open. Welcome to the plays of the day. We have 4 screens up there on the TD Ameritrade platform. We have the SPY on the left, which you can see the big move down the past few minutes in the SPY. We like that. On the left, the remaining 3 screens, I'll talk left, middle, and right. You have a POR under legal troubles with low volume, so we'll wait on that for a second. You have Children's Place off of store closures, and then you have NVAX again off a continuation to the downside. So here we go with the morning bell in 3, 2, 1, now. All right, no movement yet out of POR, so we're gonna have to just wait for that. NVAX already a $4 move. And already a 50-cent move here. Only a couple thousand shares in volume. Well, I want to stab at this POR, but I don't think I can. Need a little bit more volume before we make our move in there. These have already gone, so we need them to back up basically to their entry point before we could turn around and take them long. Again, this would be a short cover that we would need to see. You can see 17%, 12%, 11% basically. All right, let's see what other short names are out there that might be setting up better than NVAX, because it just kind of went. All right, we looked at PANW. Now that backed up. I would not try to take into that. All right, let's get into a trade here on POR. Low volume, that's 50,000, so we got enough to take it here. We're going to use 37.20. If it hits 37.20, we're going to enter. And we will need a 50-cent stop. So again, waiting on 37.20 to enter. Not quite yet. There it is. There's our 37.20 to enter. So we're in at 37.20. We are taking this short. And we're using a, let me confirm the stop real quick. 37.20 up to, yep, 50-cent stop. So 37.70 will be our stop. Again, taking that short. Seeing some good market action over here as far as selling off. Again, that didn't help our longs, but it certainly helps our day trade. So that is in. All right, PANW over here. Don't really like that. Let's check back to NVAX. Man, just keeps going. 108. You got to let it go. That's a $10 move already. So you just got to go crap. Missed it. Otherwise, that would have been a perfect trade. All right, our target over here is down to $1.50. So that would be 36.20 would be, this is 2 R's. And then 35.70 would be our 3R trade. So it was down there this morning. So that's good news. Right here, 35.80. So that's good news for the PR, and it's got plenty of volume in now, so imagine this is just going to sell off. So here's what we'll do. We don't talk about this too often, but to get more money out of this trade, because I think POR is going to work as as the volume hits here, is I would take, say if you had 300 shares, I would take 2/3 off once it hits 3R. So maybe it backs up and stops us out. I can't guarantee you this works, but I certainly like everything I see, and legal issues are always problematic. But since this has a chance to go sell down well into the low 30s, yeah, I would keep some. So instead of hitting the full 3R and taking it all off, I would let some of it ride. Again, both the trades yesterday went on to be multiple R kind of trades. So Let's check on Sorrento since we're speaking of yesterday's trades. Yeah, look at that. So yesterday it sold down. It was 3 hours right out of the gate, and then this one, same thing, 770 to 30 cents. So yeah, around a 3-hour trade with a 10-cent stop if you took it right away. And again, you can do that on a continuation. So we shall see. All right, market's still selling off. Let's look over to, yeah, basically the market's even. So Dow's barely in the red, NASDAQ barely in the red, and then SPY barely in the green. All right, so this is when we're in the trade off to the left. Again, this is where we took it. This is our upper stop limit. If you're following along, you could still take it here if you wanted, if you didn't get the right entry. I still like it as far as selling off throughout the day. So you could take it here. You would just end up having to adjust things a little lower. I would still keep the stop up here at about 37.70. So Sorrento and NVAX both worked big time to the downside. So cross those off our list. Pfizer was another one. Yeah, I don't see a clear entry there in Pfizer. So cross that off. We'll see how ExxonMobil, see if it's selling off again. These are names that popped out of the Dow. I do kind of like that there as far as a short, but doesn't really have the selling that we're looking for. But I would bet that that continues to sell off, but not going to put money behind it. All right, checking our trade. We're at 1.5 hour. Very comfortable with that trade, so not worried at all. All right, RTX was another name that left the Dow. Let's take a look at that. So again, this is actually a pretty nice setup here for Raytheon, again, for selling off. We don't like that because I have some of it long, but what's that, 6 minutes into the day, it's been red every single time, so continuing to sell. All right, get this back to where I wanted to look at for Children's Place, off 20%. Is this the one? Let me check something real quick. No, it's below its lower boundary, so hard to tell what it's going to do there. Certainly would have worked. I'm not going to take it here. I'm just going to stick with the one trade we have cooking over here because that's kind of a no-brainer. All right, let's see. POR is the one we're in. Place. Again, we'll just watch it go. BBBY we looked at. Palo Alto we looked at. XOM. Tiffany we didn't look at. We'll take a look at Tiffany here. And this is our last of the shorts. 122 down to 120. That looks bad, but that's actually only what, 50-cent move on a big chart. So not a whole lot there. Again, market trying to go, it's still hanging out about even. So these names are just selling off kind of on their own. That would have been a nice trade, but did not catch the entry. This is the only one we're in. Here's on the left on the Portland Energy Company. All right, POR Place, we got that. Okay, let's look at some longs that we were going to take a look at. Urban One, this is the one that was up 50% prior to the open. Yep, that would not have worked no matter how you slice it. That's off $1 top to bottom. So whatever Urban One is not holding there. RKT is rocket. Again, this just IPO'd and it's been nothing but going higher, off 6%. So that's some profit taking there. 29.31 off $2. I'm gonna go to a different screen and look and see if there's a headline that popped up on Rocket, because that is some pretty massive selling. There are headlines. Don't see anything that's causing that sell-off in Rocket. All right, get the mouse back over to another screen. Down, we're 2 hours in the green here. So again, just holding out for the 35.70. And again, I would take 2/3 and let the rest ride. So how would you set that up? So if you change your your stop here from your 3 hours, so we would, if you do 2/3 off, put a market order in to sell that off, or a limit order, excuse me. So that'll sell 2/3 of your shares. And for the last 1/3 of it, what I would do is basically come up an R. So I would reset the upper stop to 36.20 and then just let that last one ride. So that way you've made basically 2 Rs because you sold 2/3 of your shares at 3. And then if this one gets stopped out, you basically on that share, that group of shares, you've also made 2 Rs. So it's taken a 3R trade and turned into a 2R trade. But if I'm right, which I think I will be, at this 36.20 point, again, then if it sells off the rest of the day, then you're just taking those last third of your shares and getting paid, if you will. And it would have worked yesterday for both Sorrento and the other one we took. All right, so let's look at Smucker. Again, switching back long here. Smucker's not moving higher, 5%. It's hard for, I guess they make more than jelly, but hard for a jelly company to make that much money. Here's Honeywell going into the Dow. So getting bought up here nicely. So if you were going to buy any of the 3 going into the Dow, this one would have worked. It's starting to peak, so I would probably get out of that trade if you took that. Amgen was the next one. That's going into the Dow. So again, sold off initially up. That's a $4 move on $200 stock. So yeah, that's going higher. It's kind of topping out there, so I certainly wouldn't take it in. It's, it's 10 minutes into the trading day, so pretty be done with that. And the last one we'll look at before we go around the world is Li Automotive, is Chinese EV maker. Again, it's just been on fire. It IPO'd what, 3 weeks ago. So here was the IPO, and went up, came all the way back down. Then the past few days where it's caught my eye is just continuing back up to where it was. So lots of good news coming out of Li. All right. Okay, let's we're going to leave our trade for a second. Again, I'm happy with our upper stop is here, lower stop is here. We're at 2 Rs, so if you're bored or you want to go, just take your 2 Rs and go home. But I still think this trade's down all day long, so be confident in your trade and go from there. All right, let's take a look at switching back to long-term investing now. We'll check back in our trade a little bit. These are options. CRM option up 43%. Nice. Got DraftKings, NEO. NEO is your China EV maker. All right. Salesforce up 3%. LCA is, they've been straight up for like 10 sessions now. So they're going to become they're going to IPO to GNOG, Gold Nugget Online Gaming. They've been added to BETZ, BETZ. So everybody's getting in front of the actual IPO here. They say, is it going to the next DraftKings? Well, it is certainly following DraftKings, which I still have way too much of DraftKings, and it's all up around 200+%. But I still think there's more room to run in DraftKings. Otherwise, I would get out of it. All right, so if you had DraftKings, I shaved your position, but just maybe by 1/3 is all. All right, Intel getting some love. MongoDB, Starbucks, Shopify is a good long name. I like that. All right, let's see who is in the red today. Clickstream selling off a little bit. They've been all over the place this week. There's your Raytheon leaving the Dow, ExxonMobil leaving the Dow. Where's our Pfizer? Don't see Pfizer up here yet. Might not have any, that's why. Coal's selling off. Northwest Bio, Boeing. Boeing had a good day yesterday, so not really worried about Boeing long term, but it certainly does get affected by headlines sometimes. All right, let's go back to our chart. So here's our trade. I'll leave our trade up here while we're talking. And again, here's the one that would have been nice had I got the entry. I did not, so no money there. And then NVAX just is the one that just dropped. Oh, look at that. Dropped like a rock, 108 down to, that's a $10 move, and it made it all the way back. So generally when you see a stock profile like this is all short covering. And at some point, you just don't know when it'll short again. So you have to wait till it peaks out at the top, and then you have to wait for it to recover this entire bar. And then maybe the next one, you might even wait till all the way to 103 range. So if it comes down to this range, then you can short it again. That means you've exhausted all of the people that are having to short cover, if you will. So, all right, let me close out the chat. Awfully quiet in there this morning, and no questions for us to answer. So the question of the day, let me get set up for that. And Then we will close out. Again, happy with our trade. We'll just keep it up there while I am talking for the question of the day. Today's question of the day is, when should you sell a stock? Well, let's start with the opposite of that, which is, when would you buy a stock? And there's really only one reason for you to buy a stock or a house or art or anything else, baseball cards or anything else out there that you are trying to get for an investment, is you buy for one reason. And that's because you think it's going higher. Now, there are some other scenarios which maybe you think it's traveling sideways, but it pays like a 15% dividend. So from a total return perspective, you'd still be making money. So you could say making money, or from a total return perspective, but it's easy in your mind to think that you buy because you think it's going higher. So generally when you buy, you have an investable thesis, meaning there's a reason you bought it. And then sometimes if it's a trade, you may have a target associated with it. If it's the investing I like, which is best of breed with a moat, with a highly addictive product or service with high margin, those are hold forever kind of stocks, like, Apple, which we've kind of held forever, sort of thing. So that's why you buy. But when you think of when should I sell? Well, there's several different scenarios. The first of which, let's talk about the trading scenario. If you buy on a trade, which generally means you think something's undervalued and then you set a price target for it to be fully valued, then that's when you would sell. So we'll talk about that specific situation. I do not do much value investing, which I would call, that's like picking up the airlines or the cruise lines after COVID-19 starts, of you're like, okay, well, they've been beat up so much that I'm going to buy them, but I don't want to hold them forever because I don't want to be a part owner of these companies forever. But I do think it's undervalued and it's going to go up to a target, and then I'm going to sell. If you have an investable thesis that is basically, I'm going to buy it here and I'd be happy if I got this price, then you sell when you get your price. Don't outthink it. This is where people turn trades into investments and then lose money. If it's undervalued, like an airline, and it pops up to whatever your target is, you have to sell. And generally you're selling all of it at that point. So that's the number one reason to sell, is because your trade hit the target. Now, it's very different if you're investing like I invest, which is best of breed, with a moat, long-term, hold forever kind of stocks. I'd prefer to find, a stock like Apple that I can hold for 20, 30, 50, 60, 70 years and reap all those gains from its growth. But if you have a stock like that, what can happen, and what is happening with Apple, is Apple can take over your portfolio. So even if all your stocks are going up, if you have something like Apple that's up 77%, that was before today, and I'm checking it on another screen while we're talking. But yeah, up 77% on the year, off a little bit today, but that can dominate your portfolio. So like in my case, I have to sell Apple on occasion, which you're like, gasp, right? Sell Apple? Yeah, I do, because of this exact problem. Is I want to limit, I have so many shares that I've acquired over, a decade plus now, that, and this share split's not going to help, that the position keeps becoming more than 25% of my portfolio. So therefore I have to sell enough shares to keep it within that 25% range, which is a personal stop I have. So you might say, well, Steve, why would you sell something that's outperforming it? Well, it's basic money management. And what knocks you out of the investing game is when you think you know better than everybody else. And when you stop doing basic money management because you're smarter than the market, those are things that are recipes for disaster. So don't forget that no matter how good the stock is, and it's, Apple's been my number one and will probably continue to be my number one for some time, is no matter how good it is, they still can get hit with a negative headline. They can still get hit with disaster. Tim Cook is a fantastic CEO. If he, comes online today with, maybe he was in a car accident, or if he gets cancer and has weeks to live, and steps down, well, that's a big deal, and the stock's going to get hit. If somebody challenges them with accounting irregularities, that means the stock will get hit by like 25%. So you don't put all your eggs in one basket. So from my personal money management perspective and what I do for my clients is 25% is the max I will have of any individual stock in a portfolio, period. You don't question it. It's discipline. So you don't outthink it. You just do it. So that keeps you safe out there. So that's the second reason, is you want to trim the position. So how to trim it? Say you have 1,000 shares and now it's taking over your portfolio. You would simply sell, most would sell one lot. If you're using options, you want to sell 100 shares. If you're not using options, you might only need to sell 50 shares. So if you're reinvesting into that name, stop reinvesting into that name because that's making your problem worse, right? You'll end up reinvesting and then having to sell some of that. So that's one reason. The second reason. So the first one, if it's a trade and hits your target, you sell. The second reason, if it's a long-term buy and hold, if it keeps going over 25% of your portfolio, then you need to trim the position. Another reason to sell is if something doubles. So if you buy it and it doubles, like DraftKings, we bought it early, it doubled, you sold some, even though it went on to double again. Yeah, I got it. But whenever you get the opportunity to sell some or take some of your initial capital back off, that's basically calling, let the rest ride, or you're on house money, if you like gambling terms, which I don't like to use those, but it is true of, if you sit down at a table and you put $100 out and you're up 100, well, you can take off your original 100, right? And then the rest, no matter what happens, you're not going to lose money. And let the rest ride, if you will. So that's another reason, is if a stock doubles, you should sell some. If you don't sell any, you're really kind of being greedy at that point, and we don't want to be greedy. We want to take the gift that was given us. We had a thesis, we were right, and let's take a little bit off the table as things go. The next one is you just need the money. So the reason you have investment portfolios is so you can build wealth and resources, but ultimately you're going to use those wealth and resources towards something else in life. Dying with a bunch of money is not necessarily the goal. That is some people's goal, but that doesn't really get you anything other than a big pile of money that's going to pass on to your heirs or to charity or wherever you deem your money to go. So think along the way that you're going to actually use some of this money. So when you go to sell, I'm thinking about changing my tagline to get the most from your wealth, because I think that resonates with folks. Is okay, you've made it to a seven-figure portfolio or 8-figure, or whatever your target was. Now, how do you get the most life from that money, right? So, well, when you go to sell because you need to pick the money, you'll go up through your portfolio and you will basically pick out. Most people do tax loss harvesting. So if you have a taxable account and you have losers in that account, which is kind of tough to do when the market's been almost straight up for 10 years, even with the COVID hiccup and December of 2018 hiccup. But when you go through your portfolio, you're really looking for losers to sell those off. And then subsequently, you're looking to sell off the things that have gone up the least from a tax perspective. But if you're in IRAs, if you're going to sell stuff off and then take a distribution, it doesn't matter really whether you're up or down in the stock. Then you can use what investable thesis do I like the best. But that's another reason to sell, is because you are using the money. What I will say is that sometimes you see executives in a company selling. Well, don't forget that, and people say, well, that's a negative for the stock. It's like, not necessarily. People sell for all kinds of reasons, which is why I'm doing this presentation today. Is if you're an officer of a company, you might have a lot of the stock. So you're already probably pushing that 25%, to which you get stock options, which have to vest before you can sell them. So you can get overweight in your own company. So that's one. Second is basic diversification. You already work at that company. So if something bad happens, it's a twofer, right? If you get hit with your salary and then you also get hit with the stock. So you don't want to be over committed there. And then the last one is sometimes they just have these things scheduled out, that since a lot of times the CEO makes like $1 in salary and then several million in stock options. Well, obviously they can't live off that $1. So they do have to sell at some point to be able to live. So when you see an executive sell, that's, just one of those things that you don't know why they're selling. So don't read too much into it, where if executives are buying a stock, you can read that that's a vote of confidence for sure, because there's no other reason to buy the stock, right? So that's the difference. The last one, that I wanted to talk about here is tax loss harvesting. So when you go through your, if you go to pay taxes each year and say you have a major gain, maybe you sold a house or a business, you know, you sell your business, you're looking at a long-term capital gain, 20% generally, if it's a huge business. So what you're looking for there is any way to mitigate your tax situation. So in that case, you could sell only for tax loss harvesting. So say you bought into Raytheon and you love the long-term thesis for Raytheon, thinking, okay, elections coming up, defense stocks are poised to win either way, that sort of thing. So as you know, maybe you really want to keep it, but if you bought it at, you know, $80 and it's down at $60, that's also a way to harvest the loss as well. So sometimes you'll sell something just to harvest the loss, and then you have to wait, of course, due to wash sale rules, 30 days before you can buy it back. So that's the last reason you would sell a stock. So thank you for listening in to what reasons we have to sell stocks. So that's all we have for today's show. Please reach out through ototnow.com with any questions or comments. Thanks again for joining me. And here's to you fighting the good fight every day to be on time, on target with your financial goals. Thanks. Bye.